Hello, hello. Is it working now? Hello, hello. I think it is working. Hello. Quick update on GameStop. SPY, VIX. Bit of volatility in the markets. Pardon me. Party. And what else did I plan to look at? There was something. Trace button, what you like? Yeah, Reef, 10% move. We'll give a little bit of a look at that. And Bitcoin, VIX, obviously. DRV got another 9% on that. Shocking. And Tesla, if you wanted to look at the Tesla, there's a little bit of a trade. I think I'll start on that, actually. Which one's this? Oh, this was the 3 times long. That was something else completely entirely. Pardon me, right? Well, this is a bit of a strange start to the daily stream, isn't it? Anyway, DRV, right? You ended up getting to that resistance level and turn it into support. Look, you slip below it, back there, above it, and then you've got a little bit of a gap within it. That's the 2 hour. Why am I on a 2 hour time frame? There's a 4 hour. As you see, it's significant level now. And if it doesn't hold, there's your 200 period moving average. Significant drop back down off this thing, right? If it doesn't hold that level, which is entirely possible because, whoop, it's a daisy. Whatever it did there, I want to undo it because you're nowhere near as high on your RSI. Obviously, price action coming in for that previous level. That gives you 2 options, right? Either you continue on and going way higher on price, and you'll probably be able to see like how long that move lasts by how long it takes the RSI to get up here to, overbought sort of territory, or at least significantly into the bullish control zone. And like that, I'll be watching price go crazy should that happen. Or it'll, push slightly higher than your left side here. Your RSI will fail to do anything in there, and it'll be a failure swing, which would be an absolute nightmare. 1 hour time frame, you're not actually in it yet, which is like why you're in like a lot of danger here with this particular formation, because 1 hour you're not, 2 hour you're not, 4 hour you're just about, right? You're already in there, and then daily time frame you're in there. So that's just because, it's just the nature of this particular stock and the way those daily and so on closes have happened. So you want to be careful, pay attention to the slightly lower time frames as well as the higher ones, which is a little bit different lesson, I suppose. Anyway, we're talking about DRV. That's if you're short real estate. It's quite nifty, right? Three times the lady. Anyway, we're talking about what to do, lots of things. Well, I can tell how this show is going to go. Pardon me, right? There's this thing people don't talk about, right? When you wake up in the middle of the night, well, you call it the middle of the night, but it's 5:30 in the morning, and you've got like hyper focus on one particular idea. And you can use that's it, this idea of sleep and whatnot. So if you didn't, it's just a nightmare. So then your brain later on, right? I say you, but it's me. So 373.84. You've made it to these levels, right? You've got a gap below. We were speaking to a similar idea of symmetry on this thing, in that you've come to your previous areas, you exceeded a little bit, pardon me, the neighbours are still decorating their house. It must be some sort of palace up there. It's been like 8 months. So you've got your bullish divergence here, significant amounts of it. You move back up again, and there's a little different Fibonacci's on this drawn already, but here's the high to the most recent low in 236, where you'd be aiming for is where price currently is at 373.89, right? Spot 95 probably closes in around spot 95. So that's what you're looking at. If it doesn't hold, there's a gap below. I would anticipate this being filled before you go on and fill this very top side one, though you could do it in just one tiny little breath in that. It's peak and previous price action 886. If this Fibonacci does hold, I expect it wouldn't happen in a one breath, to be honest with you. Can I have one of those breaths? And then the 200 period moving average before it, and that 50% retracement. There's this other golden pocket and that gap to look to, which is there across all the time frames. Pretty obvious on the 1 hour, if I remember correctly. Yes, very obvious there, that gap. And this is the same Fibonacci here as over here. Just delete this guy because it's in the way of actual price action. And there's the gap below, right? I'd anticipate you filling that before the top side. Loads of different Fibonacci's here. And if you drop back below this 886 again at 368, this golden pocket that's in around the same area as 365, then you'll lose all of this, right? All of this will just start falling apart, and you'll roll over. Price action will probably come way back down again. You can take this Fibonacci in here and show you. Like that's the 236 that we're speaking about. Hopefully price action going towards. If it was more accurate, it'd get like similar to what I looked at before. Top side of that's the 382, the gap. Fall into that. You're falling way back down. Golden pocket retracement in at around 365. If that doesn't hold, as I'm saying, 886 is such a big gap. and it takes out every level of support and resistance other than the prior low, and having tried higher and failed and not even got back above a 200 period moving average on a 1 hour time frame, right, then you'd be absolutely falling off here. Going into the 1618 extensions, you'd be looking at 353, which is what I think, would be a good place to get, potential next long opportunity if this thing does crack back down again or whatnot. Anywho, right, there, so 1.168, 168 extension, 2618 over here, that got easily. The thing completely collapses easily, and OPEC are going about they're going a good way about it, right? So I mean that'll be bringing down all of our stocks. So if you see me say anything bullish about anything else, it's all predicated on SPY not collapsing, And if it does, one of the ways you'd probably perhaps like to hedge against it would be with VIX. There's 29.34 flash on that guy. This is the one that we use because it's actually where, the chart 200 period moving average on the 1 hour time frames here is down 27. You've got close to that area, but it's also a gap. If you come down, fill it, and bounce from there, B382 retracement, absolutely possible. Yes. 4 hour time frame though. 200 period moving average is way below that. You've got a big gap below it. You're clearly, very, very extended low. So if things do move up, that's a lot of continuation divergence to go with. But I wouldn't say, right, overall, when you're reaching these peaks here, you're considering this an uptrend. I mean, 1, 2, 3, 4. These are lower highs, so you're losing that. The validity of that thesis, really, it's undermined. Right? It doesn't actually work. So, I mean, you'd be paying attention to the SPY and whatnot. This looks like it's going to say that volatility is decreasing. So SPY might be stalling every so often between those levels of support and resistance that we talked about, as opposed to completely collapsing. So that's what we're looking at there. And I didn't do GameStop, right? I didn't actually do GameStop yet. Jama. Did I? I can't actually remember. I suppose we'll do it again. If so, weekly. Started on the weekly. So we talked about $30. I remember that quite distinctly, despite my lack of sleep, as being a resistance level, and we spoke about 25 as being support. This max pain at what was max pain at 26 something. So we're within those areas, right? And like if SPY doesn't go crazy, and we've already had a little bit of volatility on VIX and SPY like getting rejected and falling back a little bit. So if assuming SPY doesn't fall down, then it has to hold current levels and or go up, and it's a lot easier to stay where it is than start moving back to the top side. So staying where you are, low volatility. Perhaps GME end of the week doesn't manage to get escape much from the $26. And because this is the open interest, right? Somebody just asked in chat, I think it was Mr. Azamat. Hello, Mr. Azamat. Can you explain the record low volume past month for GME? Yes, so a lot of the low volume you're seeing, what you're looking at is the stock, and the stock is being traded a lot less as the open interest decreases. Open interest is down a significant degree on GME, and that's for the maturing over the next couple of weeks. And for the previous few weeks, the maturity, that sort of volume in around these times has been quite low, which isn't all that crazy. Overall, the stock market would be experiencing lows when everyone was away off on their holidays. They're coming back, a little bit of volume now for the next month or two overall. And then, anyway, what am I talking about here? Volume on GME, it's low. Why? Well, the open interest is really low. And so a lot of the underlying purchases of the stock are determined by people using options, and so that's low. And then when GME's volatility is low, it performs differently to its own past behavior in other instruments, such as its behavior, its velocity of its behavior within other instruments like ETFs. So there'll be less purchase and sales. If it's a lot of ETFs, for example, they're run on a sort of a passive system with a risk corridor. And if an asset is increasing or decreasing by over and above 10, 15, 20%, then it's frequently being bought and resold and traded other areas than just what you would participate as like the retail market. So when it's less than that, right, it's performing less than it did previously. And when you're looking at GameStop and you're just looking at volatility indicators alone. Boom, bum, 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 bum. Oh, I've got two of these. All right, so then like that guy, and then I'm a fan of using this guy. quite high on the weekly, obviously, but that's not the way we use this thing. 4 hour. So you're, like it's back like it was back here. Really, really low volatility compared to its previous behaviors. This is only in the 4 hour trend. I mean, I can't really make the point on that indicator, just nor can I make it here. What I'm trying to talk about is the fact that the open interest is low, and the open interest is low. I mean, that average true range is a better way of expressing it, because that indicator I was just using is much more about trading than making this particular point, right? That, like, as you can see, everywhere you might want to look at it, daily time frame in particular, the average true range, this is like lows. So you would measure, the way you would look at this is with horizontal levels, right? So like that's the low, it's like as low as it's been in terms of volatility. The volatility is as low as it's been since the 11th of January 2021, right? The day before it all sprung off. That was the low. The next place you're looking for was that previous area, like we talked about on price action, which is still on the HVP, was a similar area, and that was the lowest volatility. That was like within a particular trend. We identified it in a trading way using that other indicator. Let's put it like that. Even though I'm uncomfortable with it. Right, so, and then we reached that level and broke below it in terms of volatility. So volume's dropping down again as a natural consequence of the way it's used in other markets. Also, people are, you'll also more aware of the concept at these times, because you see price action not moving very much, trading within quite tight ranges yourself. And so you're aware of the lack of volume. But the truth is that volume doesn't mean anything. It's like that concept of like work smart, not hard. And that's how some people understand the idea. Like price action can, if there's a lot of volume, you have to understand, right? For every single trade that's made, for every single trade that's ever made, there's a buy and a sell. So there's somebody on both sides of the market. So there's an awful lot of activity. That means there's an awful lot of agreement in price. Lots of people are trading at both of these levels, and all of the, like both sides of the trade at every level in price. That speaks to agreement. And that's when there's lots of volume. And when there's lots of volume and lots of agreement, price action tends to get really, really, really flat. Ahead of a big move, right? So that's where you can use volume as a confirmation, right? As it comes in, as price does a big move, and if you've got loads of volume with it, it's confirmation. And whereas when there's disagreement, like, oh, I don't really want to sell it for that price, and it's like, well, I want to buy it, it's like, well, I want to sell it at that price. Well, then that guy has to pay loads more, right? So he's good, and there'll be less people willing to. So like a lack of volume would typically wouldn't mean that price action doesn't move. Sure, if the volume is literally zero, then price action will be like a little bit limited. That doesn't mean it won't change, because of course there doesn't need to be a buy or a sell, which would be both of, for price action to change. Price will be determined by the bid rather than, so anyone who's got an offer, right, whatever that happens to be, the lowest side of it, that'll be what you're going to have to pay, and the other side. So when the volume drops, you can typically see a bigger degree of volatility. So when you're seeing price action, right, so the point I'm trying to make ultimately, right, although I'm explaining it in loads of different narratives, the point I'm trying to make is what you really want to see, even though you're frustrated by it, is less and less and less volume. Because then when there is activity, you'll get loads and loads of volatility, which is exactly what you want, right? Whether or not it goes up, that's the next question, but you really want that. And so at these periods of time, people do start saying, like, where is the volume? Where is the volume? Where is the volume? And when it comes in, it typically comes in everybody at once, because everyone's looking at it, wondering where it is. Also, it'll be determined by the range breaking. And what I commonly talk about in these situations is it's the open interest, right? It always goes back to the open interest, but really in particular in these moments, it's the shadow that you want to be looking at in this particular moment, right? Because what actually ends up breaking one range or the other is neither the bears or the bulls like being correct. It's one of them being incorrect, right? In that the open interest is at a certain level, and it will determine as I always explain with regards to support and resistance, who's incentivized. And it'll, like at certain levels, max pain will catch out one side of the trade and they'll have to buy to close or sell, whichever it is. And that'll take price action beyond their own entry. So people will be stopping out of trades. And it's those people, when they're defeated, that they typically go through support and resistance. So like when you're looking at the charts and you're looking at price action reaching certain levels, price action breaking back above out of this range you're in at the minute, and the high being around 27, this golden pocket 27.80, that sort of level, and reaching up to 30, that's just on the top side of the max pain. So you catch everybody out, and then what happens is it isn't bulls like you and me that are buying that, right? We're buying it down here at support because we know, right, what happens is that it's the people on the other side of the trade that buy it up for us, right? Because they have to close their position, which is determined because of where most of the open interest is, right? Because it's that which expires each week, which determines a huge degree of what you later then see and look for and call volume, right? Is actually just a reason, right? So you turn what is just an abstract concept into an actual understandable technical artifact that you can derive conclusions from, and most of it ultimately comes via open interest. And so you're not able to see the I can look at the camera doing all the hand movements and stuff, silly me. Anyway, so that's the although you're saying like, why is there so low volume, right? There's a short answer to that, and it's because nobody wants to trade it right now. And then when I say nobody wants to trade it, there's like, that's not a positive nor negative, right? Or a good or a bad, or it's all I'm saying is there's less incentive to trade it now than there has been at other times, and this is the reasoning for it. And more importantly than that, this is what likely consequences come from it, right? And GME tends to then, like, this is another point, right, to understand about GameStop is GameStop tends to slowly go down and then explode to the top side. And why does it explode to the top side, right? Is it because every doomslayer and everybody who reads Super Stonk all of a sudden decided to buy it now? Is it because of this cycle that changes in time every time it's supposed to happen, or every, that stupid fucking algorithm nonsense? No, right? It's because of the same things that we've described in advance and are describing right now and talk about all the time and have explained the narrative, the logic, the reasoning. We do it ahead of time, at the time, and afterwards we analyze why and confirm it and help people improve their trading and around these events. And we talked about the psychology, we talk about the support and resistance levels, and we explain it inside, out, left, right, and center, right? And we talk about it then in terms of measuring the strength of moves. And often you'll hear me talk about it in terms of the magnitude. And in that way, I measure moves, and I measure them against previous moves in order to look for changes in behavior that will speak to changes in market participants' behavior. So to look for those signals, which we already understand. So the question never really is like, where is the love, right? Where's the volume? It's just more a question of where is price action at the minute, and who's incentivized to trade, and what direction is everybody overall then incentivized to trade. So yeah, GameStop, daily time frame, price action to start off with here. We've got this potential diagonal, not really looking at that. It's all about these horizontal levels. And price action's failing to break back above the golden poppet so far. Pop it. And then also you've got wick down to these lows at support, 25, speaking to open interest. Price action came back to these levels. Speaks to like a tightening, And so price action, you're like I was explaining before, the people are incentivized, very slightly and in very close proximity to where price action is at the minute. And so if you move away, you just get drugged back in again. So overall, you get consolidation. And then, we'll see how the balance of that goes. It's determined then over the next couple of weeks by current outstanding open interest. And then as the theta kicks in and time approaches, how people respond with their own outstanding trades. And then we'll see what the breaking point comes, because it's always determined by supply and demand. And if there's more people buying it than there are putting it up for sale, then, which is like, looks like is what you come, right? Because when you talk about these, the actual fluctuations, it's an awful lot like tectonic plates, right? There's like, let's look at these little measurements here and these little changes right now. But actually, when it comes to open interest, and if you're really getting into it, you're studying a whole lot of open interest, looking at it on its own, not measuring it alongside price action exclusively. And so you get trends, and you can then compare that to how the response subsequent to price departing from support and resistance levels as and when that happened, and then you can go back through that and get signals, and then you combine that with the volatility that we were speaking about before, and you get really hone in on big moves on things, right? And then, like, one of the ways that Rocky teaches this to everybody in the Discord, and it's been following up, like anyone that's been there for, say, the last year and a half, you'll have noticed the way he talked about the Bollinger Bands and explained that. And, you know, that created a whole group of people that went off and were like, oh, we're the Bollinger Band traders and that now. No, hi, Bollinger Band guys, which is fun and that. But and as you look for certain moves, like the bobbles and the right duck and cover, bob and weave, right? So anyway, right, that's loads of things we've talked about there, and well, great, good one, right? So I've got a course stages, all these sort of things, and more different sort of things, and wraps it all up in a nice way for you at www.technicalanalysis.school, which is there available for everybody, right? So. Check it out, and yeah, so call to action is go and sign up and learn to trade and be a proper trader with me, because I'm responsible and the best person to teach you to do it, I think, right? So that's the call to action. 200 period moving average, $30 daily time frame, also matches up with what we were speaking about with regards to open interest in the not so distant past, you know, and the 236 here at 27.79. That's been like price action's knocked off that level and this golden pocket retracement a lot, yet not managed to, you know. And so one of the things you're looking at here is this resistance level, right? That goes alongside this horizontal line. And price action's meeting that, boom, 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 boom. I want you in my room. And at the same time, it's managing to put in higher and higher lows as it gets tightening and tightening, right? So it is consolidating, but it's also like pushing higher. And so that speaks to, when you combine that with open interest and you combine it with the max pain and you look at who's actually in danger, because it's the danger, it's the fear, right? It's the continuation, it's the safety, it's the reduction in risk that drives all trading. So when price action is on the close your short position side of max pain, i.e. in profit, and that gets increasingly less and less distance away from max pain before those short positions are closed, dragging price action back towards it throughout the close towards the end of the week, then price action is telling you, right? And everyone that's trading at shorts, like, I do not trust the idea that it's going short. I do not and they're all closing. That's what's driving the price back up at these points. And they're never getting as far the next time, until such times as they're like, fuck it, close your positions. And then price action, it's them. Those are the ones, the short side of the trade, closing their positions at this resistance level. When you break it decisively on $27 and change, it's the shorts that take you to 30, closing their trades, getting liquidated, prices going up, and then people who buy on emotions, buying on emotions, right? But the doomslayers know it was these lows buying at support, and that's just so easy, especially, right? And so and if we're talking about open interest, perhaps you're trading options, congratulations, right? So that's what you're thinking with regards to how price action works, why market participants behave as they do. And you would be doing exactly the same thing too, right? If you were trading quite well and had that position and were aware of these market dynamics, you would do the same thing. And so if you were doing it, right, you can imagine if you were doing it and watching the price paint exactly your trades on the chart at your buys and your sells, then you'd know that when you closed your fucking position, the price was going to move. So not only would you be closing thinking, aye, that's the end of that then, my short positions are busted, you'd also just go long, wouldn't you? Because it's dead obvious, more to you than anyone else. And so price action moves with velocity, volume, and volatility, and goes very quickly then. Volatility, dispersal of price action over a range, it goes very quickly to 30, and the people that buy in it are the other side of the trade, thank you very much, right? Because they're going to get your money from somewhere, right? It's them giving it to you when they buy it. You know how when trading is a fight but it's you and the next guy or girl, and you're going to, right, it's like you didn't want to do this, but they said they were going to take fucking everything from you. So you're going to take everything from them. And the way you do it is by making them give it to you, right? They give it to you. And they do it when the price action goes back above 27.79. And this is why I talk about body close, body close, right? And people are like, oh, this is so stupid. And you're like, nah, you're just stupid, mate. You're a stupid fanny. You'll never learn nothing. I did it and made it easy for you. And well, you wanted it complicated. I did it complicated at the start of the video. You clearly missed that bit, didn't you? Because you're a fucking idiot. And actually, I was making it easy for them. And so we say it and we love it. And it's a fucking mantra. Body close, body close. Right? Until you've done that, you've not done anything. Right? So there you go. Call me Phileas Fogg. Right, what country shall I do next? Let me know. Let me know. What charity shall we target next in the next targeted charity stream? Let me know. Can do it all in a community tab. You just respond to posts that are currently up. Talk to each other on it. It's dead fun, that. Also, lots of other ways. You know, I'm on the old Twitter and Instagram. Don't follow any of those things because it's mostly fake accounts, right? And they're just like not worth it. So just stay away from it, right? So 200 period moving average, yeah, we did it all. We did it all, right? We did everything. So that's that. If it doesn't close, it falls back down again. These are the previous levels of support, and we marked out as 1950. We talked about it till we're blue in the face, you know. And we did it in a responsible manner too. So everybody knows if you don't hold these levels, you've got a prior low within this formation. And if that doesn't hold, you're going to that area, right? So that's that. Congratulations. And SPY. What did we do here? We did it already. I'm sure we did it. Like, I don't know now. I'm pretty sure we did everything. Party, 1.59. You came in around these levels. Not bad. Pushed up to the top side. Not bad. Downward sloping diagonal. I mean, it's kind of pretty obvious what's going on. Checking with the last update. Nothing's changed there. BBBY. Right, I did a thing, right? I did a thing. You'll have seen it in the trailer for this show. If not, I'll make the video public later. It's a very, very short one. I did a thing with a druid, a French druid. Thank goodness me and French and I are getting back on good terms again. We did a thing with a French druid called Getafax. He's called Getafax. And he temporarily suspended my fax ability powers in order to push BBBY up to 7.74 on behalf of those people who need to get out of trades and are able to do at those levels. That's what he said he would do. I don't know if it's ever going to happen. It's not financial advice. I don't trust people like that. I think it's fucking stupid. But, you know, we did the old blood magic and everything to help you. So, you know, take advantage of it. And yeah, so what did I say? I stayed at dead money. Thanks for the knowledge drop on open interest, volume, volatility. You're welcome, sir. You're welcome a million times over. Good to see you. Good to see you. And what else are we missing? I think that's everything. I think that's all the faxes. I think we got all the faxes. So, pretty good. Yeah, I did a thing with French Druid. Hit that like button. Hit that like button. Hit it, yo. Hit the like button, yo. Hit a like button. I've got cocoa in my face. Right, so that was a quick live stream. Again, another quick live streams. Hopefully helpful. Hopefully some lessons in there. I think there is. I would actually call that lesson a lesson on trend. It's about trend. That's all that is. Just trend. And once you understand it completely and utterly, you'll find yourself thinking about it a lot less. It'll just be a framework for the way your thinking works, you know, a framework for your thinking. And the other TA you do then will fall into these little holes and work around these little pegs. Trade spotting, if SPY is likely to fill the gap below before going to the top gap targets, would that suggest GME is very short term? It would certainly suggest that well, you see the gap on SPY. Are we on SPY? No, we're on bleh. Yo, I want you in. Where is it, yo? I mean, I can do all sorts of things. You're not going to give me SPY. QQQ. You've also got a gap. Look at this. Is hilarious. What a nice guy he is. Right, so you got that. You came back down. You got that. And I suppose you've not actually quite got this guy on his right there. But What is this? I was trying to get in here for the heads up on the SPY. The gap here, you know, I mean, it's likely it does it beforehand, but there on the daily time frame on QQQs, you've not really got much of one. So let's not actually do it on QQQs, or let's take that lesson though and say, hey, you know, shut up about your gap trade spotting, you idiot, and think about everything else beforehand. Daily time frame drawings off, yo. What about this? There's no gap on the daily time frame on SPY. It's only on the 4 hour. So I mean, look at this, for example, trade spotting. Trade spotting. This is trade spotting trying to beat, like, you know, perhaps like when I did the SPY TA earlier, it wasn't clear what I was really thinking. Because have I deleted my drawings or what? Is this a different SPY? Why are you doing this? So. No, it hid them. Right, so I was saying, what I was saying there was, I think it probably does this gap here, where big floppy pink dildo is, here. Looks like a crayon, doesn't it? It's funny, you know, it's funny, eh? What does your dildo look like? So then up here, you've got this gap between the high and the low here. And yeah, so the point I was making there, Sir Luke, was it's more likely it fills this one before this one. But that's maybe... not actually helpful. While it could look back on it and say, ha, TradeSpotting was right, it did fill this gap before this one. You know, that could be in 29,000 billion years time, and in the meantime, right, countries could have changed. What's this, all this conspiracy I've been hearing about subduction and stuff? I mean, clearly that wasn't part of God's plan. Which day of the week did he create the tectonic plates on? I mean, I don't know, right? See, you'd have been smacked for saying that where I came from. Anywho, right? So what am I talking about? Yeah. So you wanted a helpful TA. That's what you really wanted, didn't you? That's what you really wanted. What I was thinking was... price action has been like in a distinct trend from here, right? This is the top side gap until it got down to like somewhere in this low, right? Because things started to change in that area. I mean, like I could say somewhere in this low. Why haven't I've just turned them all off? That's why. So I mean, the somewhere is this is like the RSI at this stage. Get out of the way, average true range. So at this stage. Wow, this could have gone smoother. You're below the center line on the RSI on the 4 hour time frame, so that's not good. But that's not the point I'm making. Though it does bode well for my TA that suggests you're coming back to fill this gap before the top side. But it doesn't actually. Right, so shut up, Trey Spotting. So this thing, I mean, you've seen this loads of times before, this sort of thing. Maybe got back. Right, that's only got 2 touches in there. You had a little bit at this first stage here. Yeah, sure, but it went straight through it and did. Yeah, sure. Maybe it used it as support, and maybe you could go on with that. But it's now shut up, trade spotting. Right. So what I was trying to say is, at the top side of this, look. Right, the top side of this. Right, sensible. Right. Look, that's a good question. Top side of this. And then down to somewhere in here, distinctly different from what was going on beforehand, right? You could say, well, it's a displacement of previous and blah, 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 but we're not talking about that. We're saying from this high, which was the RSI at this point, to this low, which was the RSI, somewhere in here, things were quite distinct. And the point where it all changed was this low in the RSI, because price action went to here at that point, and then subsequently the RSI started to climb back up, price action went down, and at that stage there was a divergence between the momentum and the current direction of price. So we could say that perhaps price was going to turn around a little bit because the momentum had started to change, and turning around, we would then measure from the low, the high to the low. Like, that's not 100% accurate. In around to the low, right? And we'd take it to where the low you actually got to, not where the behavior changed, but where you actually got to measure the retracement back again. And you'd expect to get to the 236 at this stage with that bullish divergence, or a 200 period moving average on the same time frame. That's what I use for trading, just those two things. So when it comes to like actually happening or not, I don't necessarily know if it's going to, but that's what I'd be looking at, right? How does Nancy Pelosi do it? Well, she's got a handy thing, John Jim, where she's got an extra advantage. Yeah. So, and she loves it to be known that. So, anywho, right? Well, she's hard. It's not like anyway. So, yeah, I'd love to chat to her. If you want to come on the show, Nancy, happy to have you. Be very, very polite. Make sure you've got a great time. Be the best YouTube show you've ever been on. Guaranteed. So in around here, 236 retracement, close that gap. You can see now, right, when I've drawn this on, with that low back to that high within this part of the trend, that holding the 236 would be closing this gap. So if the question is like, are we going to go down? Then this is the area where you would be looking to break, right? Until you get to there, right? It's not down. It's just sort of staying where you are from in terms of like framework for how you would be looking at SPY. If SPY breaks below 369, shout out Luke Spears. If SPY breaks below that level, then you'd be saying, well, this doesn't look fantastic anymore. Where's the next support level? I mean, maybe it's the golden pocket, but price action doesn't look like that. I mean, you'd be coming back to your previous low and you'd be saying this failed as a retracement back up again. You know, it just failed. Got to the 382. That was well and good. Came back, filled the gap. It had a chance to bounce. It was the 236. Had a chance to bounce. Still didn't do it. It's failed, right? And you go down to like the 1 hour time frame. It didn't make it even to the 200 period moving average. 30-minute time frame. It would be then losing the 200 period moving average, as well as doing all those bad things. 15-minute time frame, then you'd be losing the 15-minute 200 period moving average. And as a proxy for trend, then you'd be below the 200 period moving average everywhere. Added to breaking below the 236, having an opportunity to bounce at closing a gap, not doing it. All of that stuff, right, which speak to the significance of breaking through here. And so you wouldn't stop at that golden pocket retracement, which would be measuring the retracement back down from against this low to that high, which golden pocket retracement being around 365. You probably wouldn't stop there, though that would be the first place to look for a stop, because you've also got price action here and like moving back to a previous low. That, like, you know, this would be the first place, prior high for this formation. You would be looking for a bounce in around there. So I can move this guy just to make that point. You probably be getting a bounce off that. If you did break through 369, you'd probably go to 365. But I don't think you'd hold that. I think you'd have lost this idea of retracing back up again. You'd be looking for an 886 and it coming down to 360 or 359. And I don't think you'd hold that. I think you come down to the 353 and test this level, which is why that's where I'd be looking for like really long, deep chocolate on my biscuit. But that might not happen because you've got so many more reasons to bounce here than you would here. So that this would be a shut up, Will. So you'd be looking at, it's not even Wednesday yet. Wait a minute, it's Thursday. How did that happen? Oh my God. Right, so there's even less chance that GME breaks away from that max pain zone. It was already nearly the end of the week. You've only got 1 day left now. So the question is actually about GME, wasn't it, Sir Luke? Right, anyway, I'm trying to answer it with SPY. What was it? It was because if GME is SPY is likely. Yeah, so it does it. I think it probably does fill this gap, right? If it doesn't, then it moves to the upside targets 388. If you know, you'd see it happen when it goes back above 374 and then 382, you'd be looking at 388 and it'd be going to 388. 382, you'd go to 388. Yeah, it would. Looking left, 1.1326, that would be up there as well. That's confluent with that. Yeah, that's nearly exactly on it. It would go to 388. Right, so it's 388. That's the upside target if it breaks above the 236s and whatnot, all those targets I just mentioned. But the place that it looks like it would come down to first for a bounce is here. So the question being not like, because that's why I'm saying like it's not very helpful from a trading perspective, perhaps, from another human being's head and ears listening to me say these things, if they've got their own plans, you know, like I've been, which you obviously most people watching this channel will have, right? It's much easier to fill an empty cup than a half full cup, right? It's to fill it perfectly, like, you know, you can fit a lot more in it, that's for sure. So the point I'm trying to make, right, is we're measuring the idea of how likely price would be to bounce at one level or the other, yo XBIT. So if price action comes back here, it's super likely to bounce. And that's like the idea of it being so very strong and obvious, and it also being a 50% retracement, and then Dow theory suggesting you'd bounce from that. If you look at this previous fib, if it doesn't hold, you've got the other theory, right? So that's why it would be very, very likely you'd bounce there. And so with that being possible, price action probably comes there, and that would be a lot of support. So a bounce here is possible. In terms of breaking up to the top side, you'd be having to do a number of things. You'd have to be defeating certain things. And on this time frame, on the 15 minutes, sure, look, right, there's subsequent to these divergent lows, price action did go back up and has been performing very differently from that trend that we were talking about initially answering this point. But when you're moving back up here, you're putting higher highs, higher lows, you know. So people would say on the 15-minute time frame, when you broke here, right, that so which was like an area of resistance, you had a higher high at that stage. Then, you know, you broke that trend that was quite obviously expressed in this gap crap that things had slightly changed. You came up, this was a high. This was your next higher low. This is a higher high, right? Because it's higher than the previous high. This is a higher low because it's higher, right, than this guy, certainly. And even highs, right? It's higher than previous highs. So as a low, it's obviously higher. And anyway, right? So then here, is this going to be a higher low? Well, if it comes back below there, that would be a lower high. So, you know, question is again then, right? Are you actually going to bounce? How long is that going to last, right? That move to the top side, sure, you could get a bounce, but how long is it going to last? Because the 15-minute trend suggests that that stage you'd be putting in lower lows, and you know, is this a low, right? Was that a low? You went back against the 236 against that previous high. So is within this section of the trend, some people would say like this was a low. Back above the 236, went for the golden pocket. I mean, that would be where you would have target anyway. But personally, I don't think so, because what you're looking at when you're on that section of the trend, is like the idea of measuring trend gets slightly more nuanced. You know, you're kind of within a range here, aren't you? Let's be honest, right? That it's like this area of lower highs, lower lows, very obvious. This distinction when the trend changed, very obvious. And here, actually, I drew it out, and it's not actually higher lows, lower highs in a perfect definitive trend, nor is it certainly any extrapolation of some linear recovery from the lows. So at this stage, you're saying, well, price action again, consolidation, trading within a range and really not putting in higher lows, lower highs, right? There's no real trend, no trending move. Sure, there's a trend, right? Just like, you know, whatever, fashion, but there's no trend in moves. So at this stage, you would be losing that idea of higher lows, lower highs. And so the idea of like, well, it's just continuation, right? Which is what you would expect after a bounce, continuation. That's kind of in doubt because you've not actually been trending to continue. Also, when you look at the previous high, which is this guy, and compare it to its previous high on the RSI, you at both stages there, you were questioning, right? There was like higher here, lower on the RSI, higher here, right? Certainly lower than this macro position, lower. So like that's enough touches of divergence. You would think price action probably does come back down. And so maybe, you know, it doesn't necessarily get back up again, right? But then it'd all be answered depending on the strength at these levels, at this 200 period moving average, at this 2-3, all of that would be determined when price action gets here, which would likely, again, be as a consequence of the open interest, that like that, all we were talking about the narratives before. So how does the open interest perform? Which side call or puts increases? Where does the ratio between the two of them increase? You know, if we take the average true range off and we look at expiry within the next 4 weeks or so, how does that affect, right? What's that open picture on open interest? How does that exact ratio between those specific reduced, distilled picture of interest, how does that change as price action meets support on this week's maturity and on what we see on the charts here in terms of gaps and so on? So that's what I'd say about that question. It's like actually a very long answer about something else. So, pardon me. So in and around these levels, that'll tell us that the strength and that narrative we see on open interest will give us hints as to what's happening. If we're going to go, you know, because we will bounce. Will we bounce back up above the level we broke down from? Will we break back above prior highs? All of that will be hinted at within there. So that's what we're thinking about. Yo. And then, really, that's essentially what we're talking about. Yo, I'm a GME Elitist. Yo, XBit. No problemo. Of course, I'm an old timer. XBit. You the XBit who was here for, like, you know, a year watching the channel called XBit. So, it may well be. So, it's okay. You can do. Everyone's welcome. Like the people watch. Plenty of people that are GME elitists in various ways. The terminology is used by people who don't like GME as well as people who do. So, it means different things to different people. And like we're currently answering a question about SPY as for its implications for GME, for a member of the chat box, a very esteemed member. And the same thing can be done with, and is even easier done when looking at AMC. So a lot of the people like abide by and tolerate my AMC analysis with the understanding that I'm doing it partly to inform the GME TA. And if you've ever heard me talk about things, I'm a Dapper Dan man, right? Nearly a significant chunk of my portfolio, which is my life and funds everything I do, is in GME. and then I have a distinction in conversation and it's one or the other, then I make myself clear. And I take a very ethical and straightforward approach to helping everybody, because I know that that's the way that best helps GME ultimately, because I've already been to the end of the fucking rainbow and I understand how it works, right? So everyone's welcome, and everyone gets 2 chances. And it's great to see GME latest, right? And that's the way it is, because, right, GME I'm a Dapper Dan man, right? GME is going to change the world. So, and the people who do it are the people who buy its support, not resistance, because they have a bigger impact. And they're less panic merchants later on. And a lot of them watch this show. So, right, and when it comes to, like, whether or not, like, anyway, right, so that's it. If you've still got a problem with me after, like, somebody should clip that for anyone who's ever got a problem with why I cover AMC or GME, because it's a perfectly acceptable way to do it. I also have some AMC, believe that it'll do well because the same shareholder are holding it, and it's the shareholders that define this movement, not either company. Particularly offended by the behavior of the AMC board. I think they should be replaced. I'd happily do the job myself for free, and I've put out strategies there, and so, you know, nobody can say I'm here pushing popcorn on behalf of someone else, right? Because those same people would love me to shut up. And anyway, right, so remember, right, who Trey Spotting is, right? And, like, if anyone ever tells you any different, right, don't take their head out of the no, don't, just ignore them, eh? And if someone says Trey Spotting says, you know, right, I don't need to say I'm nice, right? So here's this gap, right? Yeah, that probably bounces there, and you find a lot afterwards about what goes on next. So that's the answer. And the question being, is GME bearish then temporarily? Well, I'd say, yeah, there's the idea of then what happens with this bounce here at SPY might not be, you know, it will determine what happens in GME. Definitely, but I think what you would probably get then, if it does come back there, doesn't necessarily mean GME comes all the way back to its equivalent level of support. You know, I don't know, it might come back further, right? Because you've got this diagonal line, 200 period moving average, that breaks 200, the next support's 25 and change. That's the basis line for the information here, you know. But we drew this in before any of it had happened, you know, and you've kind of got it now. I mean, none of it, so I couldn't. Anyway, so if this doesn't work out, there's areas where GME could break down to, you know, this thing draws itself really. And then these prior lows, right? It could easily come in 24.50. That doesn't hold 23, 24. Those sort of levels, if SPY breaks down to those, you know, because there could also be a little bit of a wick and a body close and whatnot. You could be looking at that, right? And you'd obviously, right, so at the same time, anyway, the RSI is rolling over. It's sort of giving you a trend line. You've got this potential head and shoulders. You're at support now. You know, so this doesn't look wonderful. And I would say then GME probably does. If SPY comes down there, GME probably does come at least down 25.50, probably 24.50. And why not round these levels, right? Because it is more reflexive, and, like, there's a lot of room to break down on. And still, that being said, right, that doesn't mean that GME is going to continue to break down after that, because, again, we're not really trending, you know, like, this is, I mean, trend in a trending move. Like, this is a double top, sure, right? That's a double bottom. This is maybe overall a double bottom. Really what you're looking at is price action in this range, and it's not doing much yet. Right, it isn't doing much, and that's why when I'm coming on these videos, like, beforehand, I'm thinking, well, I don't want to blow smoke up anyone's arse. I'm not going to hype it up, right? I do want these videos to get more views than they are, and I know that there's, like, all sorts of ways of doing that. But instead, I'm like, well, I'm going to have to provide more value in other ways. So there's a clip about BBBY to start off the show. After this ends, you'll be redirected to my trade on Tesla. I think it's going to $300. And when I'm talking about this, I'll be as honest as I possibly can. It looks like we're trading in this non-shitty little area, and when things change, we'll know about it primarily on the, like, what side of max pain we end up closing at, and start things pick up again. And part of that is because of, like, other reasons. Like, the open interest is, like, defined on, especially when you're talking about it on things like SPY. A lot of this is to do with general liquidity. You know, so many people have been covering short positions, and other people took short positions at ultimate lows because they never thought it would get here. And I'm talking massive funds, massive fucking funds. Like, people are talking about, is Deutsche Bank the next Credit Suisse? Man, fucking Citibank are fucking shit in their brick. Like, it's fucked. People have been trading so bad, right? And what it means is there's massive liquidity problems because of people short covering. So nobody's able to get out of trades. Everybody's going to get whipsawed to shit. Professionals are going to get whipsawed out of it. And all of it's because they're panicking because they're emotional about their accounts. And they can't see the price action's just going along here, doing fucking nothing. It's doing nothing. And it'll do nothing until they capitulate, right? And they're like, and the media come out and like, retail have to capitulate to do it. They don't seem to understand. Retail are bag holders. Retail don't capitulate. Retail hold the bag through 2008 dips to 2020. That's what retail do. They don't capitulate and push the price down. They're never more than like, 3-8%. That's ridiculous on most things. So stupid narratives the media talk about because they don't understand anything, which would be typical, wouldn't it? Because if you had a job doing that, you probably wouldn't be very good at economics because you could get a better job that pays more. Anyway, so, why listen to some fucking idiot, right? They're only there to provide you with entertainment. That's what the news is for. It's entertainment for people who don't want to watch a soap opera. That's what it is. That's all it is. So that's what we're talking about, right? And there's a huge liquidity issue in terms of shares, right? And that'll maybe transfer into like some sort of credit crunch later on down the road. Just absurd as it is because there's so many fucking dollars, right? But anyway, so what was it? I'm answering Luke's question, and yeah, it's likely it comes back a little bit. SPY come back, it comes back. If SPY breaks up, then GME, it's because it's hyper reflexive. And it's like, in some ways, it's like the canary in the coal mine, but it's not a coal mine, right? It's a coke mine, and the canary goes off his face. It's like, it's like techno going on, and the canary, and there's like, it's bald, like it's shooking off all its feathers, and it's like, I'm a bit hot in that, and anyone got, and you're like, wow, this canary's fucking brilliant, right? And you're taking it out to the club and that, and it's like, that's what GME's kind of like, right? You're looking for a little bit more oomph across the markets, and you'll see GME catch on fire a little bit more because it's like when everybody's like, well, what's going to move? Well, those meme guys, they're fucking crazy. The volatility, where's it highest? Well, those things like GME, it explodes up, like, etc. And like I was saying before, there's a lot of open interest defining how this works. So like they'll be closing it, pushing it, and then people jump on the bandwagon. Like this is the one you would jump on, right? Because it's like that. Anyway, it's like that canary in the coke mine. So, That's what we're talking about. We're also going to briefly talk about Reef. Like that's what it did, right? I mean, it's only up 11.4%, but it went fucking boom. Like that move, it was 30% move. It happened in like 10 minutes. What was it? It happened in 10, 15 minutes maybe. So yeah, you're looking at that, and does it keep happening? Well, I mean, this is the thing. This is why people like Reef. Part of the reason why I talked about it before at different times, because it does that, and it's only so matter of times before something can do that, before it's like back doing it on crazy ass levels. Like it's like, there's broken that trend now. So, anyway, right, point being, right, when certain things take huge outside moves, and it's not a secret, I mean, people who trade this know that. People who trade GME, just like yourself, they know it. People who look at VIX do it for that reason alone, because they're like, I'm doing this so often. This is the one, some people only ever look at this. So, that's it, yeah. So I think we covered everything. I've also got an AMC clip which is coming out at some point. I think it's already out actually. So I've done that. Did a quick AMC clip with targets and supporting and all the rest of it. So that's that. So today was Thursday. That was quite a good stream. I reckon with loads of value there. Feel free to, I know they don't get faxes right here, but feel free to chip into the coffee fund. Anyone who ever wants to at any stage. Nobody who's ever does it regularly ever should ever do it just because I'm saying that and feel like I'm not saying that. Oh, actually, don't chip. Bye, I'm going now.